Swing trades, we're not talking about, swinging a baseball or something funny. So what is a swing trade and how do you make your entry and how do you actually make money from it? So swing trade pretty much means one thing. So you're pretty much buying a stock and holding it at least for a day, at least after the closing. So why do people do that, right? So what's the psychology behind it? So here's the thing. So a lot of people, a lot of retail investors. So retail investors are people like you and me who are trading from our offices or our homes, right? So we are retail investors. So a lot of retail investors, they might not be eligible for day trading because they might not have 25K. That's one reason. That's usually the main reason. Second reason is sometimes people just like to hold on to it for a day or two and make the maximum profit that they can. That's the second reason. So that's why people do swing trades. Now, the point of a swing trade is to make sure that you buy it a couple days or a day before a big announcement. That's number one. For example, earning calls, or for example, let's say an FDA approval that's coming up. That could be a swing trade as well. So pretty much that's the whole idea. So you buy it and you hold on to it for a couple days, and then you go ahead and sell it. That's the whole point of a swing trade. So if somebody says, I'm swing trading, that's what it means, right? So you get an idea. So they're holding on for a couple of days or at least a day. Now, how do you find swing trades? So like I said, FDA approvals, earning calls, a big news that's coming up. So a lot of people, what they do is they do earning call plays. Pretty much what that means is that every company that's listed on exchanges, right? They have something called earning call every 4 months. That's when they have to tell people, hey, this is how much money we made, or this is how much money we lost. Are we doing good or bad? Now, what you do is you look at how did they do couple quarters prior to on an upcoming earning call, and based on that you make an entry where the RSI is not that crazy because you don't want to be buying at a time where it's like high up, right? Doesn't make sense. Fair price, but not too low of an RSI. Make sure the volume is pretty decent. Make sure of that because you don't want to be buying a stock and then it doesn't go up. Keep that in mind. So that's one thing. And a risky part about a swing trade is that it could go the other side. That's of course any trade could, but these kinds can. So make sure to do a lot of research. That's one. And number two is so what I usually do is, let's say an earning call is coming up and they have some good rumors on Twitter or Reddit or places like that, or groups, right? So I buy in, I go with the crowd, I buy at the right price, right? But at the opening, when the volume is about to shoot off, I get out at that morning. So keep in mind that on stock market, people early in the morning, right? Usually, not always, but usually early in the morning when there's a super high volume going on and people are buying up, that's when people who bought it from a day before, they take profits. And I want you to be that person, and if you feel like, hey, that's a good decision, do it, because that's what I do many times as well. Sometimes I buy stock and I hold on to it for a couple of days and I wait for the earning call or the FDA news, right? And if it's a good news, what I do is I go ahead and just, when the market opens up, you see it going, you see a gap. So gap is, the stock is going up and down, and the market closes, right? But the opening price is not starting from the closing. It's like higher, or sometimes it could be lower. That means that the stock is about to, it's about to go down. So usually that's the right place to sell it off and be happy, take profits. Because most of the times, I don't want to go through the entire event because it might go south and I might end up losing money. So that's my strategy. Now that's with smaller mid-cap stocks. Now if you are planning to do swing trade with a bigger stock, like a large market cap stocks, what you need to be doing is you need to be looking at a chart patterns. I'm going to show you 5 top ones, but there are more. So I'm going to show you really quickly, and I want you to do a little bit of research. I'll make videos on these chart patterns for you guys as well. So let's take a look at it. So for example, let's say you are looking at Netflix or Lululemon or Google, right? And you see that there is a triangle being formed. Now, keep in mind always, right? Trend is your friend. Type it on the comment box. Type up trend is your friend. Trend is my friend. On the comment box, type in trend is my friend, because you have to always go with the trend. Now, so it's called the ascending triangle. So our previous, trend is going up, right? It's like on a pricing channel now. It's going up and down, up and down. Now, what's going to happen with this is you'll know because you look at what was the previous trend. The previous trend was it was going up right here. You see it, right? It's going up. So it's going to go up. So this channel right here might be a great place to take a position, and then when it goes up, then you sell it off. Now keep in mind that use these patterns on large cap. I mean, you could use it on smaller cap stocks, but usually I don't. I look at larger, like Google, Tesla as well. And when it was I think $300, $400, you could do that as well. Tesla, what else? Netflix, large cap blue chips. Okay, so do that. So that's one. So always remember, trend is your friend. That's ascending. Okay, now descending. Now, in this case, here's the deal. Okay, I wanted to show you this one as well, because I want you to know that it's not always gonna go up. So that's why I said take a look at trend is your friend. So if the trend is downwards, right, and if you take a position right here because you see a triangle, it might fall off. So don't do. You don't want to take a position on these kinds because the trend is downwards. So it's so simple, right? We give it these funny names: ascending triangles, descending triangles, Kardashian bust, and things like that. But there is one like that. But the concept is simple. Trend is your friend. So on the comment box, type in trend is my friend. Got it? So let's move on. So trend is downward, and you see a triangle again. Don't take position, okay? Now let's take a look at one more. So this is called a symmetrical triangle. That means that, same kind of stuff, but there's multiple of these big triangles, okay? So on here, these triangles, they can be random and so on, but on these symmetrical, they're perfectly, you see it, right? You see it. Now you see it, right? It goes up and down. Again, on this one too, trend is your friend. Whatever the trend was, if the trend was downwards, it's going to go down. Keep that in mind. Now, 2 ones. Okay, Head and Shoulder, and not the Samfu. Head and Shoulder and double bottom. Now, keep in mind, they are kind of the same thing, but not really. But, again, they're all, worded with, they give you, weird names, but they all follow the same concept. Okay, so now let's take a look at this. So, let's say the stock is going up or down right now. The point with double bottom and Head and Shoulder is, is it going to reverse? What's this doing? So let's take a look at this. So right now, a stock is going down, it makes up, then it goes down again, right? Now, this is the point. So you make a line from the first point of the W, kind of, and then you draw it out. Now, this is called a neckline. So this line right here, this chart right here, if it crosses the neckline, that is a signal that it's going to go up. Now, if it doesn't cross the neckline, then maybe you don't want to take a position. So keep that in mind, okay? Now, same thing here. Same concept. Now, keep in mind that the double bottom could be flipped as well, okay? Keep that in mind, okay? So neckline could be at the bottom as well, not always on the top. So the neckline, we could make an M as well. So it's called the top, double bottom, top bottom as well. So it's the same concept. They give you different names. Keep that in mind, okay? And next up right here, we have Head and Shoulder. Again, this can be flipped again as well. So let's take a look at this. So we have the first shoulder and the head. So shoulder, head, and the shoulder again. Now, same thing again. Now, let's say if the stock is like this, it's going like this, it goes up, it's like this, right? Now, you make another neckline. This is my neckline, right? Now, the neckline, does it cross it? Now, if it does cross it, it's going to go ahead and follow that trend. Just keep that in mind. So, neckline, trend. So, all you need to get out of this video is, number one, what a swing trade is, and, what kind of stocks you need to be, swing trading in, and these top 4 or 5. I gave you 5, right, today? Top 5 chart patterns. I mean, there is a bunch of these, guys, but they always follow the trend. Not always, not always, but most of the time they do. Okay, most of the time they will follow the trend. Keep that in mind. Okay, I hope you enjoyed this video. Make sure to subscribe and look for other videos on my channel. I would love to have you there. Thank you so much. Bye-bye.